Hey guys, how are you? Yep, it's me. It's the market sniper, the crypto sniper, and the reset sniper coming back at you on equities. That's right. It's been a while since we touched on equities. In fact, got a couple of interesting things to talk to you about. Indices, US indices particularly. Select equities that we had spoken of earlier, some that worked, some that didn't, and what happened that the others didn't work. In essence, if you're hearing a small bit of jazz in the background and a bit of thunder, it's really grey skies out here. In KZN land, we've got thunder and lightning. It's all very frightening and all of that good stuff. But yeah, we moved down to the hotel to record this. Luma's power was being cut. So it's been really wet. Anyway, so I'm going to talk to you about indices. I'm starting with the Dow here. This is big picture first, so we always go big picture. Remember, super macro, understand where you are, what continent are we talking about before we start getting into the hustle and the nitty gritty of how, why, what, when. A couple of things I want to illustrate, maybe a bit of history as well. For some of you that might be newer traders, some of it might be entirely new. Equities after 68 largely stagnated for a long period. It was the stagflation era. Here it was. So here you have the Dow from literally date of my birth, that's right, 68 till around about 1982. Then you properly broke out of what would have been this sustained stall box. This was during the gold period, Nixon and his Vietnam War, getting America and the military-industrial complex properly on the road, indebting his nation, decoupling money from real money, his fiat paper from real money, aka gold, and stagflation as it was not a good time. Anyway, the 80s saw Volcker cancel inflation after a long, lengthy battle, jacking the interest rates up and strangling it, doing what Fed's chairmen are supposed to do. He's the last semi-serious Fed. And then we went to the amazing Greenspan era that started round about here, just before the 87 crash, in fact, over there. But it was easy money and pumpity, and that's where we went. Now, what many people don't realize about our subprime crisis, as well as a bit of history, is when we tapped out at the 2000 level, that was kind of a high point. We didn't really close, if we just take that marginally high into account, we didn't really properly trade above that till around 2014. 13-14 is when we first got above what I call a megaphone. There's quite a bit to say about that. We do an entire training course on a chapter in our training course on broadening patterns as well as tightening patterns. If you want to learn more about that, please like and share the video first of all, and register for a call. You'll find out more about how patterns should be viewed in terms of whether they constrict or they're broadening, and what does it mean when they broaden, and how do they trade? How do you know whether they're continuation or reversal? Well, there's a lot, and I can tell you this is new theory, HVF method theory. It's very powerful, and in this essence it was a continuation, and you'll learn how and why you can identify that. But that's one for premium members. So anyway, that period, if we just go back into there, actually you ended up sitting till 14, which was actually a 2000 event. Yes, you did get marginally higher in the subprime era, but that period was 14 years without real progress before you started making proper new highs when you took out that high there. So in the same way that you had a kind of a very long decade here, I would say literally from the peaking out, let's call it 68 until 82. That took me to, I think, what would I have been, 14 years old then, 12 years to 80, yeah, 14. And then you get a 14-year period here, literally from 2000 highs until you've made new highs on the 2008 highs. So you would have seesawed around in this megaphone. Not very easy, because there would have been some nasty plunges to endure as well. Most people would have been shaken out. In fact, the subprime one was even worse than that one. So it got many people very bearish. But anyway, that's a bit of history. Most of you know that by now. How are we doing now? So let's drill in a little closer and get into the nitty-gritty and facts. Why I say at the moment indices are going to go higher and continue to go higher in the most hated bull market. So what happened? Well, we had our big friendly Fed come back to the party, and now they're doing QE again, after doing their U-turn on interest rates, which is something we predicted after the market really wetting the bed at a number of occasions, but most specifically here, leading into the end of 18 into 19, and that was roughly 34 months from the first increase, which happened December 15, over there in interest rates, where they were supposed to be tightening and reducing their balance sheet. That's right. But guess what? The minute the market didn't like it, they came to the party again and they did a U-turn on interest rates. And in fact, following a number of banks in a rather poor state, they've actually been providing emergency funding into the repo markets. In other words, they're back to printing currency and devaluing the fiat. Even though you've got markets at all-time highs, they're going to ensure they go even higher. But these are in diminished dollars. Remember this and understand this. This is also in a NERP and ZERP interest rate environment, negative and zero interest rate environment, where here, no matter what price you pay for your equities, how ridiculously expensive they already are, they at least give a positive yield in terms of their earnings, which is how and why corporations have been borrowing unending amounts from banks and buying up their own stock. Why? It's cheaper to pay a very low interest rate on an overdraft to a bank than to have to pay earnings and dividends at these ridiculously low rates. So more on that in a bit, but let's talk about how it looks now. So I'll give you a wee flash of how we've been analyzing this market in terms of what has gone on. So this was your huge macro megaphone that I've already referred to, and why this was an upside continuation. And now in more recent times, you've actually had another megaphone. And again, as I say, we'll go through the full theory as to why that's upside continuation. But more importantly, if I drop time frame again, inside that megaphone, we also had HVF structure for the breakout. So what am I referring to? I'm referring to what's going on in the top here. This is a log scale, by the way. The chart is just ridiculously parabolic outside of it. So you can see what I'm drawing here. I'm referring right here to this structure over here in terms of that, and that is giving you upside break, and it has further upside targets to make. That's right, indeed. And the same goes for the SPY, yes, the SP 500, and a lot of the shooting stars, the shining stars in terms of this, are your big old fangs. And older than FANGs, your high-yielding Microsoft, for example. So if you look at these charts, if you have a look at MSFT, we've got upside draws for Microsoft with further highs. We are anticipating and awaiting Amazon to set up again, even though they had a disappointing earning event recently. So that's Microsoft. Not too much higher to go for Microsoft, but it could probably overperform. So over through 150 there. We have the exact same on Google and Alphabet. All your control structure, mega corps that are huge on big data, hoovering up your data, running the tech surveillance game, positioned to exploit, they are doing just fine. How about Apple? Yes, them too. So the mega corps, I remember everyone, Zero Head, saying how Israel was told, all Israelis were told to buy on big on Apple 5-6 years ago, when it was already a highly valued equity, and it continues to march on. These are now well over trillion market cap companies now, guys. We passed that milestone. Again, further upside for Apple, and I'm pointing to $2.99. That means you're going to run $300 a share. $300 a share on this equity. So, you know, they just keep coming. They just keep coming, and it's a game of the mega corps. These are the guys that don't get to pay the normal tax rates. They get to negotiate their tax rates. You don't on your tax. And smaller corporations certainly don't. They get all the tricks that the mega corps with the best advisors can do. They get the scale, such scale. They should all be broken up. They're monopolies in some senses. People will say, well, Google and Apple compete in a lot of the same markets, even Microsoft. Okay, they're duopolies or they're oligopolies. The point is there's not enough competition. They may not be the sole one, but they're one of very, very few. So actually, you are in the most hated bull market. Why? Because everything yields nothing except equities, despite the fact that equities are overpriced. Plus, you've got a ton of money coming into ETFs that are just buying the majors, because the more the majors improve, the more they have to be bought so that they are overweight. So you're getting a nifty 50 syndrome. If you have a look at the Russell, which is smaller indices, you will see it is slightly different. They have not done as swimmingly recently. Russell 2000, so this is 2000 of smaller cap, and you'll see that they're languishing a little more than the others. And it's a much harder ETF to buy, because remember, those small equities, they can only soak up so much cash. Try to get all your money out in a hurry, you're going to have a real problem with the ETF on a small cap index. So it's certainly not a recommendation from me. Let's have a look at some of the equities we'd spoken about. I'd wanted to get a few of you kind of reset trades where if you got the trade right, you could maybe get funded up to come and join us. And this one didn't work, so let's start with where it's gone wrong. By the way, the trade is still not invalidated, but given where we discussed it at the timing and the point that we were discussing it, it certainly has gone largely up from there. And that was Wells Fargo. So I'm generally a bear the financials, and we were discussing it in and around here, these levels, and since then it's virtually couldn't have gone worse over there. That said, in the macro, this was very much a reset trade. I probably was, forgive me, I wasn't clear enough in saying that I still think this is down, and it didn't mean the timing is here and now. But if you did take it and you got a bit hurt, sorry for that. This is what we'd call a monarch heads and shoulders, but within that there is a mega head and shoulders, for which this will just make the right shoulder. So we may have just been too early. There was a chance this could have been a weak shoulder, but you probably get a more substantial one, especially given the major Fed U-turn and the subsequent reversion back to QE. So the minute that happened, a lot of shorts fell out of bed. Simple as that. Why? Free, cheap money, tons of it. Here, we'll provide it. Here's the Fed, helicopter money, boom, 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 bosh. What do you get? You get equities going up. I still would be bearish this. I think somewhere around here it could tap out. It could start to look a bit soft. If it came down hard, you could have that neckline that we were discussing, and it could fall. But for those that got involved here, it's obviously hurt. We did better on others, so I'll show you CCL. So I did a series of equities which I shared. I also mentioned the Korean won. That's very much a reset item, but we mentioned Carnival, CCL, as a potential trade that you could take that would get you on. That was the UK listing of Carnival. I highlighted shipping holidays for the aged. Oh, they're gonna like that coming from me. So this is still in log scale mode. Maybe I'll take this one down to regular just to give the context a bit there. So we were highlighting this particular trade that went in hand in hand with this pattern structure. In other words, there and there. And we highlighted a target down to there. That target is made. A few people lost confidence. It came back quite strong, kissed the funnel, and then spilled it down to target, job done. So that was the inverted HVF, and it was successful. Congratulations to those of you that took the Carnival short and made some money. I'm glad for you. And that was it pretty much at a glimpse. There are possibilities of further downside to come. Remember, this was also the shipping narrative where they had been burning the bottom end of the grease barrel, which is really, really toxic. So it will rally now after having made target, but the possibility of further downside in terms of possible head and shoulder type structures exists. So you've got, what have you got here? You've got a left, you've got a big head. Either that's a right shoulder or maybe that's a right shoulder, but you've certainly got a key level of significance running through there. And some scope for possible downsides. I don't get overly excited by head and shoulders, but when we get patterns within patterns, I like it. That was an early chance to get in. Your short there and your trigger short there and your stop on the other side there. So that really boosts your risk reward when you take it off there, and you could have left some on for maybe later deeper runs. But well done to those who made the HVF target that I provided in that video. What else did we talk about? I also did mention in a subsequent video PAA. After all our community had gone in from just sub 25 round about the traditional entry for this. I mentioned it to you guys. So this is super big time frame. This is inverted, what we call inverted structure. It's a continuation pattern for the sell-off there, and I'm looking for further downside there. I actually assess that there's a possibility this trades sub $4. That's right, it'll have a 3 in front of it. Now that was at 25 that we were shorting the rising wedge there, and getting in, and I was buying puts at the 18 strike. They are now in the money, or they were in the money until this open, and I was buying well out the money puts at the 18 strike with 2 years on them, so plenty of time, and taking spread bets on this. So this one has done really well for us and is bearish, and this is an oil play. We're quite bearish on energies and oil, and particularly this pipeline company. We think this structure is very, very mean, and it's got nasty downside. There's going to be news to come, either generally in the oil and energy section or specific to this equity, or a combination of both. But there's going to be stress for this executive. In our opinion, in our view, we can always be wrong. Any return to these levels I would add further to positions, because so far it's done really well, consistently dribbling down, not yet spilling, not doing anything fancy. I think there'll be news flow and events that may lead to that later. But as ever, we could be wrong. Your stops are up top here. Now, I would probably, if I was entering now, I'd maybe use a little rally point over there. That was, by the way, that rally point was all the drama about the drone and the shortage, Saudi's biggest field being shot up and trying to create some heat in the oil market right there. Of course, they've got Armco that they want to list. The butcher who chopped up the journalist in one of his Turkish embassies is now doing this big citizens distribution of essentially an old Rockefeller company that was doing and digging the oil out for him. So it's all sorts of skullduggery there. I wouldn't believe a goddamn word that came out of that place personally. And I'm a bear oil, and I've never seen change, hope and change in them. Now suddenly women are driving. Now they want to be tech leaders. They've given a robot the first Saudi citizenship. Oh, they've got so much innovative thinking all of a sudden. I think these are people who know their oil game number is up. There's also Neom, the town Neom, which is just down the hood from their Israeli friends. Up in Eilat. They're going to be doing all sorts of separate laws and rules in there and creating this subculture and futuristic place. Less I have to do with them, the happier I am. PAA and oil, I'm still bearish on them. Both this equity, which has been performing well, and oil generally. So watch out on energies. Not seeing that I would want to be in energies in spite of the strength of the market. This can't get a bid at the moment, despite the market doing that. So such weakness in an environment of such equity investing strength generally tells me a lot. What else did we have a look at? There were a number of things we had a look at equity wise. One we are in currently, I'll give you this one, but been in for a week or two now, is Avon Rubber. So our premium guys, we've got this as a long. This is actually the UK side, so it should be there. You can watch out for that. Upside structure in that one. We've been playing it. It's through the 1900 mark now. Let's drop it down to the 4 hourly. You can get a sense of where we are. So we took the setup there. A little break and feign, and now moving up. So that's one you can watch. And it's a bit late for us to get in, but we know what our targets are, and there is further upside to be enjoyed. And what else have we got for you guys? Remember, method. I'm doing a newsletter right now, in fact, about how mentally everybody actually desires unexpected gains. This is called the random reward monkey. You all have the dopamine hit that you get from the random reward monkey. And the random reward monkey is when, the monkey comes up and hits the button and gets 3 shots of juice when he was expecting 1 shot of juice, and he loves it. He's getting more than what he expected. But then afterwards, if he keeps getting 3 shots of juice, he gets used to it, and his dopamine excitement becomes expected. And when you have something that's expected, it's less special. It doesn't give you the dopamine hit. So by varying the outcomes to the monkey and sometimes giving him nothing, and then sometimes giving him loads of sweeties, and sometimes giving him peanuts when he doesn't expect and not giving him when he does, he creates a continued state of dopamine. If you allow him to detect a pattern and it starts to become expected, you lose it. Humans have that too. We get dopamine out of unexpected gains. So what actually happens is you do reckless things where you've done no analysis just to see if, what the heck, I've spun the wheel, I've thrown the money on the cash. It's kind of like the casino factor. You have no control out of it. You've not applied any process. You're not expecting anything. Can I get a big winner? You're actually fishing for an unexpected gain. Read the newsletter, register in the details below. It's fascinating how to stop your own dopamine hungry. Don't become a dopamine hunter from intervening in the stable, rational process through method of building your wealth trading. Do not confuse the two. Dopamine hunting, which is for thrills, spills, and entertainment, versus rational development of your wealth. And what happens is after a winner, you're particularly dopamine sensitive because you just had a surge, you're flush, you've got cash in your account, it's awesome, you're really excited and all of that, and you want to rinse and repeat to get another hit soon. And to increase the value of the hit, because you get a diminishing returns, you increase your size, you oversize, you take a quick punt on a hurry, and what actually happens is that turns into a catastrophe that not only takes back your previous profit but takes a massive bite out of your equity, and then you get a mega anti-dopamine. It's a stress cortisol feeling that absolutely crushes you, and you start to think, I can't do this, I'm miserable, and all of that. This introduces volatility into your biology in terms of the hormones that are running through you, and you've got to stop it. I give you the 5 great rules of ceasing the tendency, the natural human tendency to seek dopamine. Anyway, so that was Avon Robber. Keep an eye on that one, see if he bats on. We've got a number of other equities. Some of them are early that we've just taken. They're great trades. If you want to find out more, you want to talk to an HVF trader, book in for a chat or a call, grab the free mini series and the resources, like and share the video so I can do more of them. If we're growing in followers and we're growing in interest, I can broadcast more often. So yeah, that was a quick update. Indices to go up further. Yes, they've got targets that are some way above, led by a lot of the big micro caps. Yes. That's not reset, Francis. You said Wells Fargo would go down. It is a reset trade. It isn't yet invalidated, but the Fed has reinflated the game and extended for now. However, there are signs in debt markets, such as the high yield debt markets. There's signs in the banking that the QE money is going to cause problems. It's boosted gold, which is resting now, but it has boosted gold when they reintroduced it and they did their U-turn on interest rates. It boosted Bitcoin. They're both resting now, for now, while dollar and fiat gets predominance back, but it won't go on forever if they keep printing the currency. Some of these are reset trades. Let's cover the USD Korean won and I'll finish on that. It is kind of equities that I was doing, but I did mention the Korean won on that one. So here's my take on this. It's coming. It's a very, very powerful trade, but it's going to be a reset trade. I don't know whether it'll be 20 or 21 in my view. It's going to be a mega mover. It's as valid as it was the first day that I shared it with you. So if we go up to the big time frames, I'm hitting the monthly here. You can see the Asian crisis. We due another Asian crisis. I think I highlighted in a previous YouTube the amount of fiat that, in terms of M2 money supply, that's been created on the Asian side generally. China, first of all, and then of course Korea, Hong Kong, and many of the others. In other words, I would say they were disproportionately represented in the total M2 money supply. That's right. In other words, they've created more fiat recently. China particularly came out of nowhere than other much more developed nations that have far more established existence. So you had a major continuation there. We're going to get a major continuation structure here. And this, I suspect, will lead in time to a super spike that will overperform in much the same way this overperformed, although not necessarily by the same amount. That will see a halvening. This will also mean, interestingly enough, that the equity markets, so if you take a look also, this is both China and South Korea that I've included in this. I expect both those currencies to do exceedingly badly, with the exception of the yen. The Asian currencies are going to get a real roasting coming. My suspicion is, once again, as I've said before, post the Trump re-election thing, kind of 2021. So we might churn for a while. We're getting a bit of dollar strength now, and the Korean won is firmed up at the same time. It could even be a mini head and shoulders here, where it could dip a little lower if you look at this in a lower time frame. So that I'll leave you to go look at yourself. So we could buy it a little lower down, but it'll be a long-term hold. And we had a little bit of red when we thought it might have a chance of breaking out. And we wanted to make sure we didn't miss it. So there was an element of protecting ourselves from feeling FOMO. And then it turned and came back down. We got out and ate a little bit of red. But the gift it will give us on the long side will be huge. So let's show you the Chinese equities look. You can have a little look at what we call the A50. I'll put it, I'll put it on the, this is another index, of course, on the Hong Kong option, and we'll go probably with that one. And this is something we've also been watching with regards to mega moves. So with the currency mega move to the downside, the good quality equities that are dealing a lot with foreign clients, still making money, etc., will do exceedingly well. So what you're actually seeing is almost the corollary of what we're expecting on well, very similar to the Korean won. As the USD Korean won goes up, that actually means the won's going down. And in a similar sense, this is the Chinese A50. So with their revaluation down, whoops, let's get the drawing pen back on. Thank you. There we go. Something like that. And you actually have a little look like that. Like either it's going to go higher and drift off and then tighten and then go, or we could already be in a position where that could be the beginning of the move. I don't think it's quite yet ready. So I think it'll mess around a little bit. But you want to watch that, and you'll get something similar on the Kospi. So go and do your research there. So real indice plays for you guys. Further upside in a crazy, crazy world where, as I've mentioned, the 16%, 84% of the equities held by, I think, the top 10% of the people in America. So only 90% of America only have a small 16% of holdings in the indices. So it's the most hated bull market because no one apart from the top 16%, and my apologies, the top 90% holders of the equity, which are a very small percentage of the population, 16% of the population. The other 84% just don't have any stake in it. So it is the most hated bull market, and that's why it could go higher, especially with the Fed printing, the central banks easing. Europe is so soft, UK is soft. There's nowhere that's strong. There is nowhere that is strong. They're all looking 60 plus, it could be even in the low 70s now. Bonds in Europe, cheap and negative yielding. So there you go, there you have it. Okay, quick fire through a couple of ideas for you to keep you sharp out there in the market. If you like this kind of analysis, we do looms almost daily, a number of times a day, in fact, across all the markets, including crypto, FX, equities. And we have a look at our best opportunities. We look at setups, and we, of course, we go through the education material, how to be a lifestyle trader. You could come and see the thunder and lightning and the rough Indian Ocean if you chose with us at some point in time. Anyway, click the likes, click the shares, and that's it from me. Appreciate you, and grab the free links at the bottom down below. We'd love to chat with you, talk to an experienced HVF trader who was where you were 2 years ago and can give you his own personal account of what it's done for him, and explain the product option choices to you. All our guys are traders. Okay, love you and leave you. Enjoy yourselves. Thanks for watching. Bye for now.